Hello, my fellow Ripplers. This is Chris Miles, your anti-financial advisor. Welcome to the show today. A show that's for you. Those of you that work so stinking hard for your money, and you want your money to start working harder for you right now. You want that freedom and cash flow today, not 30 or 40 years from now, but right now. So you live that life that you love with those that you love. But most importantly, it's not just about getting rich, it's about living a rich life, because as you're blessed financially, you can create a ripple effect through the lives of others. And that is the ripple effect I'm here to create for you guys. Appreciate you guys tuning in. You've been binging, sharing with others. And not only that, guys, you guys have been just amazing. You've asked great questions, which we've used as topics for this show. So appreciate you guys reaching out as well. And even for those of you that have actually reached out to us and become clients, appreciate you as well. As a reminder, you can also go to our Facebook page. Many of you don't know this. If you already subscribed to our YouTube channel, go to our Facebook page, the Money Ripplers group. You can go check that out. You can become a part of that. So go make sure you go and request that group today.
Chris Miles was able to retire twice by the time he was 39 years old. But he's not content to just enjoy his own financial freedom and peace of mind. Chris wants you to have your own ripple effect so you can live free today. He's not the financial advisor you expected. He's the anti-financial advisor you deserve. He's jumping behind the mic right now, ready to make waves. Here's Chris Miles.
All right, guys. So I've got a guest today that I'm excited to bring on. Like, not only is because he's just an amazing, he's doing some amazing stuff, and the guy is achieving amazing things, not just in business, but in his personal life as well. But he's got a great topic that I know many of you guys will ask about from time to time, which are solo 401ks. Should we do them? How do they work? What's the difference between that and a self-directed IRA? What's the difference between that and even having your work 401k? Because many of you don't realize this, but your work 401k is locked up. You can't do anything with it, right? And that ticks you off when you realize that you don't really own it and control it. But that's different when we talk about solo 401ks. So I'm bringing on here Daniel Blue. Not only is he a regular contributor to Forbes, but he's also the owner of Quest Education. And this is a company that helps entrepreneurs obtain capital for their companies, pay off high interest debt, and also be able to have self-directed managed accounts, which of course you can invest in things like real estate investing and other alternative assets. With over 10 years of educating small business owners, he has a knack for helping individuals get creative with their finances that lead to life-changing results. In fact, under his leadership, Quest Education has reached the 7-figure mark 2 years in a row with thousands of customers through the United States. So Daniel's based right out of Las Vegas, Nevada. Welcome, Daniel.
Hey, Chris. Thank you for the introduction, and it's an honor to be here today.
Yeah, man. So give us more of your backstory. Tell us more about who Daniel is.
Yeah, so I got involved in sales at a young age. I dropped out of college when I was 18. I went to school because that's what society told me to do. Mm-hmm. And I got into sales and found that sales was a way that I could make some pretty decent money. I didn't grow up with money. I didn't grow up with a family full of entrepreneurs. My parents got divorced when I was 12. My mom raised me on her own after I was 12 years old. So we were, there were some times where we struggled financially. So I went into college just really not knowing what I wanted in life. I just knew I didn't want to be broke, and I wanted to pay my mom back because I really looked up to my mom for carrying the load for so many years when my dad left. So I found myself in sales. I was in a space of real estate, and a lot of people I was encountering would say things like, I just use my 401k to flip a house. I used to use my IRA to invest into a rental unit. And I'm thinking, how is that possible? Like, I thought retirement accounts were just for stocks, mutual funds. So the whole concept, Chris, of self-directed retirement accounts and using a retirement account to invest outside the stock market in places like real estate, private businesses, precious metals, things of that nature, that was exposed to me. And I thought, man, this is an industry I really want to get into. And certain things happened in my life, and I was able to meet certain people, and the stars just aligned just enough for me to take that leap. And I left the sales space in the real estate world, jumped into the self-directed arena about 10 years ago. And it's been really, really cool. I've worked for a company for a number of years, learned the business, learned from a lot of great people. And then I'm out here in Las Vegas. So I use a Las Vegas analogy. I just took all the chips on the table and I just bet on myself. I just put them all in and started my own firm about 4 years ago. And it's been a fun ride being able to, and we were talking about this a little bit off air, Chris, where people know a self-directed retirement account, or they at least have heard of it, where they can control their own money and use a retirement account to invest into real estate. But what a lot of people don't know is there's other plans out there, like a solo 401k, where you could access your retirement account penalty and tax free and use that money to start a business. I know you attract a lot of people that, like you said earlier, they want cash flow now, right? They want to supplement their income. Maybe they're working a 9-to-5 job and they want to quit that job. We had a gal not too long ago. She was in that bucket. She worked corporate. She wanted to quit her job. She ended up finding an online business, an Amazon-based business where she could start generating some income, but she needed capital to fund her business. And she didn't want to get a loan to get the capital to buy the product. She needed about $20,000. So she ended up having an IRA, or I think it was a 401k from an old job. And we helped her convert that account into a solo 401k. And then from there, she took out $20,000 penalty and tax free and used that money to buy the product for her online business. And then it was a 5-year loan, meaning when she took the $20,000 out of the solo 401k, as long as she put back the money within 5 years, there's zero penalties and taxes on this transaction. So it gave her plenty of time to get the capital, buy the inventory, make money with her business, and then replenish her retirement account, pay back her solo 401k. So that money can still work for her down the road in the now, but then more importantly, in the present, she now has a business where, she had the capital she needed to scale.
Well, let's kind of dig into that because, we always hear people talking about their 401ks at work, but this is very different in how you're using it. And I know there's a lot of people actually that either one, have a business and they've been told, especially with self-directed IRAs, that you cannot use it to purchase your own business, right? Not for a self-directed IRA. Because they're like, no, you can't do that. That's the one thing, that and buying wine. You can't have your wine collection with your IRA, your self-directed IRA and stuff. But, hey, you could buy a franchise, just not your own business. But here, this is one way to get around that, right?
Yeah. So what you're alluding to is a prohibited transaction, right? And there's a few out there, right? Like you can't use a solo 401k or an IRA that owns a property and then you live in it. Right.
Yeah.
A self-directed IRA cannot own a business that you are a managing member of. Right. So there's got to be arm's length distance if the self-directed IRA or solo 401k own the asset. Right. But the example I was giving and what separates a self-directed IRA from a solo 401k is the loan feature. Yeah. And the loan feature is a really nice tool to have in your back pocket where the IRS says, you can take a loan from your plan, 50% of the account value or 50,000, whichever number is less. And it's a 5-year term. So the loan has to be paid back within 5 years. Even though you're paying yourself back the money, there's an interest rate on the loan and it's prime plus 1 to 2%. So right now we're telling our customers the interest rate's about 6.75%. So let's just say someone's listening to this right now. They've got $50,000 in a 401k from their old job. There's no loan feature on that 401k from your previous employer. If that 401k was with your current job, there might be a loan feature. But if you've got a 401k and it's from an old company, there's no loan feature. If you have an IRA, there is no loan feature. But a solo 401k, it does have the loan feature. So if you end up having, let's just say $60,000 in a 401k from your old job, and you qualify, and we can get into this in a little bit later here, Chris, if you qualify for a solo 401k, then you can take that 60,000, convert it into the solo 401k. 50% of 60,000 is 30,000. That's the most you can get your hands on penalty and tax free and use that money to fund a business, maybe pay off some high interest rate personal credit card debt. We've seen a lot of success stories with that, Chris, where, maybe their credit card utilization rate is affecting their credit score. And if they can just pay down some of their high interest rate credit card debt, they can get their hands on a, 5% line of credit at the bank or a 0% credit card, right? Like that's huge. That's going to save them a ton of money.
Yeah. Good point. Here's one thing that's cool too. And I guess you're kind of alluding to this anyways, but, with a 401k, like at your employer, if you were to borrow from that, they make you pay back with every single paycheck, which that's a risk if you're in business. If you're brand new, you need liquid cash, you need it available. But to give you the 5 years to be able to pay that back, that deadline, it might have to be a lump sum, but you probably wouldn't want to do a lump sum, but you could. But it gives you that flexibility. You don't have to pay it back month to month, which you would have to do with a loan too. For a normal loan, you would have to pay it back every single paycheck or every month.
Yeah. So to be super transparent, it's a 5-year term. The IRS does require that at a minimum quarterly payments are being made. So a quarter is a lot better than a month though, right? So definitely one, there's some more flexibility, but two, and I see this where people kind of bite themselves or kick themselves in the foot, so to speak, where they take a loan from their 401k through their job, and then they quit their job 2 years later. And then next thing you know, they have to pay back that loan a lot of the times really soon, like 30, 60 days. And if they don't pay it back in full, then they have to claim that the money is income, and they're going to get crushed in penalties and taxes. So that's another beauty of the solo 401k is, you get flexibility from a quarterly payment standpoint, but then you have the full 5 years, to pay it back.
Now, one thing I've told people, of course, is that, if you have a 401k or an old 401k or an IRA, and let's say they don't qualify for the solo 401k, good news is, you could use that money still for business purposes, kind of, cancel out the taxes because it counts as income, but you're also getting a write-off from if it's used for a business expense, but you don't necessarily avoid the 10% penalty unless you're qualifying for some economic hardship or something like that, right?
Yeah, for sure. And that's important is the 10% penalty that's obviously can really, really add up over time, right? If you yank out $100,000, next thing you know, it's a $10,000 early withdrawal penalty. I think the main thing, Chris, and this is why I vibe really well with you. And I think why we're team anti-Wall Street is there's not just one tool, right? Like there's just not just one approach. And a lot of these big guys at Edward Jones and Fidelity, it's like, here's this Class A mutual fund, here's this, index fund, and that's it. And a solo 401k to me is just a tool in the tool belt, right? Just like a self-directed IRA is, just like a whole life insurance policy is, just like a real estate multifamily deal is, right? Like it's just a tool in the tool belt. So the solo 401k, who it's for people that are entrepreneurs without any W-2 employees. So if you've got maybe an LLC or a sole proprietorship, you could be working a 9 to 5. You could still have a day job, but maybe on the side, you've got this entrepreneurship activity going on. As long as there's not any W-2 employees in the picture, whether you're full-time or part-time business owner, then you qualify for the solo 401k. And it's a plan that might get you from point A to point B, depending on what point A looks like for you.
Now, I can already hear the question. Someone's going to ask, hey, if I have an employer that has a 401k right now, and I do have this side business or side hustle where I'm a solo entrepreneur on the side, can I have both at the same time?
Yeah. So technically, if that person has an IRA or 401k from a previous employer, they can still convert it into a solo 401k, still have the solo 401k with a company like us, for example, and then still have the 401k with their current employer who uses Fidelity, right? So they can still have both. They can still use the loan feature on the solo 401k. They can use the money to invest in their business, invest in real estate, et cetera, et cetera. Where you want to make sure you're crossing your T's and dotting your I's is the contributions. So you can't max out the contributions for the solo 401k and your 401k with your job. So I'll give you kind of just like a nerdy answer. A solo 401k, the maximum contribution is like $62,000 a year. A portion of that money is employee deferral. You, the employee of your own business, you can contribute like right around $19,500 per year, a little bit more if you're over 50. You can't max out the employee with your business and then the employee with the company you get a paycheck from, right?
That's right.
But you still can take some of the profits, some of the income that your business makes and contribute it into a solo 401k or something like a SEP, for example. So there's still some ways to get some, tax deferral or some Roth, status on your retirement money, but you can't max out both.
That was one thing I was going to bring up too, is that the contribution limits, right? Where those come into play. One thing that is nice with the solo 401k is you do have higher contributions you can do. Now it implies that, of course, you have money coming in. So I know often we'll have people reach out to us that are consultants, whether they've got a W-2 full-time, plus they do consulting on the side where they might make another 100, 200 grand a year. This could be a great way to take some of the income, funnel it through, and then that can also be used for business purposes.
Yeah, for sure. The Roth solo 401k contributions, I've seen a lot of our customers, especially over the last couple of years, take advantage of. You can contribute, like I said, up to $62,000 a year, and there's
Yeah.
no income restriction. So with a Roth
Right.
IRA, if you make more than a certain amount of money every year, you can't
Mm-hmm.
contribute into a Roth IRA. That's what the
That's
good old
right.
IRS says. Now you can get around that with a backdoor Roth conversion and things like that. However, with the solo 401k, it's just really direct. You can make $500,000 a year. You can be a millionaire and you can still contribute 62,000 a year. And that money could be all Roth contribution. And
Right.
how I like to explain Roth is, let's just say you put 50,000 into a Roth solo 401k, you're claiming that 50,000 as income, right? So you're paying taxes on that $50,000. However, if that 50,000 were to grow to 500,000 over a long period of time, that 500,000 is now 100% tax free, right? So you paid taxes on the seed, but not the harvest. And if you have a spouse on the solo 401k tied to the plan, and there's enough income coming in, they can contribute up to $62,000 a year. So, theoretically, if you're running and gunning on all cylinders, you and your spouse can contribute 62,000 a year into something like a Roth solo 401k.
Yeah. I think that's one of the biggest selling points right there is just that flexibility. I mean, the only thing that I know I can do that is like a whole life insurance policy. But again, there's pros and cons to using each. So what would you say are some of the biggest misunderstandings or myths that people have about a solo 401k?
I would say that a lot of people think that a solo 401k is something that's just for the stock market, right? So TD Ameritrade, Fidelity, Vanguard, Edward Jones, most of those companies offer solo 401ks. And with those plans, you can buy Apple stock. You can buy a mutual fund. Some of them may or may not have a loan feature. If you have a solo 401k with a Wall Street based company, you're going to get a Wall Street menu. Like picture a restaurant that's called Wall Street, and the appetizers and the entree and the desserts are what you see is what you get. Yeah. If you have a solo 401k with a company like ours, you get to flip the menu over and you get a different menu than you would have seen at Wall Street restaurant. The different menu includes crypto, precious metals, private equity, real estate, private lending, promissory notes, right? And that's how a lot of these big wigs, these ultra wealthy have been able to make a lot of money. If you want to go down a rabbit hole, just Google Mitt Romney, self-directed. Google Peter Thiel, Roth IRA. Like these dudes they've stashed hundreds of millions. I think Peter Thiel was like a couple $1 billion in these plans. Do you think they're doing this with, Apple stock? Like no shade to Apple. I love Apple. I've got a lot of Apple product. I'm a believer of their stock, but no, right? They're investing into private equity. They're investing into alternative assets. So this is all IRS code. I think that's another myth is a lot of people think, oh man, is this legit? Is this legal? Like, how come I never heard of this? This is IRS code. This has been around for years and years and years. That's what I love what we do. We're not financial advisors. We're not here to pitch investments, sell insurance, sell real estate, sell, anything in the sense other than the plan itself, right? We're just here to show people that this is all Googleable information. Like it's all there for you. And you could figure it out on your own and take down that, path, or you can work with, a professional like Chris or like myself or a lot of other companies out there that can take you by the hand and, save you a lot of time and headache.
For sure. Well, and then that's one thing I told you off the air is that, although we talk about with our clients about solo 401k, self-directed IRAs and things like that, and help strategize of where they can place the money with investment strategies and whatnot. The thing is though, setting it up, we do nothing with it. If someone asks us, hey, who should we set it up with? I'm like, we'll go find a company to help you set it up. Right. Like, we might give you a few options, but you actually do that. Right. That's something you guys actually do is help them set it up and then really hold their hand more through that process.
Yeah. It's almost like we're like the analogy I like to use is LegalZoom, right? Someone savvy, someone with maybe time or maybe an assistant, right? Like they call their assistant. They're like, hey, go to LegalZoom and set us up an entity, right? And like, that's easy, straightforward, set up an entity with LegalZoom. Or you hire a CPA firm, right? You hire a tax service firm to just white glove service, take you by the hand, make life simple, right? And that's
Yeah.
really what we are. Right? We are a go-to customer service education team to take people by the hand, help them get all this set up, teach them how it works, and get them to the finish line. One con with self-directed plans is they're a little bit more cumbersome in the sense of if you have an IRA or 401k with Fidelity, I can just log into my Fidelity account, click 100 shares of Apple, hit buy, and I'm done in 30 seconds. It's not quite that simple with a self-directed plan, right? There's just more moving parts, few more sets of paperwork. So there is some of that. And for people that are savvier, that know these plans, that have done it before, they probably don't need a company like ours. But for people that want a little bit more hand-holding, some customer service, some one-on-one love, be able to call somebody and, a person in America picks up the phone. That's where we come in.
Awesome. Well, we'll be sure to put your contact information in the show notes there, as well as links and things like that, just so people can contact you, follow you, or even just reach out for questions. Because this is a very niche thing, and there are some purposes to use it. There's some great purposes to use it where people can knock out of the park with it, and then other times like, you know what, this is good, and I'm glad you thought the 401k was sexy, but maybe let's look at another plan. Let's look at something else that might fit with what you're trying to accomplish or what your situation is. And so, I love that you offer that kind of guidance.
Yeah, for sure. And I didn't even tell you this, so this is going to be a surprise for you, but I definitely want to be able to give back to your audience. I know you and I just met, a couple months ago, a few weeks ago, and we're already kind of some similarities. I know you're a stud in the running game, so I'm trying to get to your level on the running. But I've got a book. It's called Blueprint to Your Best Retirement. It hit Amazon bestseller in a few different categories. And it just teaches people solo 401ks and how to access your money penalty and tax-free, the self-directed space. So I will, I'd love to give a copy to your audience. So, when people go to my website, danielblue.me, just hit in the message, just say that you listen to me on Chris Miles' podcast. I want the free book. And we'll be able to send that out to you. We'll ship that out to you. So then that way, you can take an opportunity to read the book. It's super simple, really easy, short read. I wanted to make it very, very simple, short, sweet to the point, so people can get done reading it and take some action and get some results.
Perfect. Yeah, I appreciate that, man. That's a great gift. And I know there's going to be people who want to consume it. They're like, okay, I got to dig deeper into this. There's some of you guys I know, like engineers, that are thinking about making that launch away from your business or your company right now. And yeah, you'll definitely need this book. So, well, cool. We'll be sure to put that in the show notes as well. But Daniel, again, thank you for your time today. It's been very, very, very insightful.
Hey, Chris, thank you so much for allowing me to be on your podcast.
Yeah, you bet, man. Well, everybody else, there you have it. If you guys are interested in figuring out how to set these things up, go check out the description in the show notes. Again, you can read and study about this. At the end of the day, it's all about, what are you going to do with this information? Will you take action, or you just let another opportunity pass you by? That is my challenge to you guys this week. Make it a wonderful and prosperous week. We'll see you later.